The spring real estate market has finally hit, and it appears that things are selling faster, for more money, and more often. And while sales numbers are nowhere close to what they were last year, it appears that the Canadian real estate market has finally found a floor. And this all comes as consumer sentiment in the country finally makes a turn for the better, while expectations that Canadian real estate values are going to increase are also better. So depending on whether you already own a home or whether you're looking to get into the market, this could mean different things for different people. And in this video, I'm going to take a look at the headlines. I'm going to compare what sales look like this year compared to last year, as well as what's happening in values. And then I'm going to take a look at consumer sentiment, because this is the piece of data that you should be watching if you're looking at entering the real estate market in the next 12 to 18 months. But before I get into it, my name is Nolan Matthias, and if you want to thrive financially, this is the place for you. So do me a favor, hit that subscribe button and hit that like button so more people like you can see this video. And if you are looking at purchasing a home in the next 12 to 18 months, make sure you check out my home buyer masterclass, which is linked in the description below. Okay, so the spring market is upon us and things are getting crazy, because while many people expected that home prices would continue their downward trend, it turns out that home prices pretty much across the country are actually making a turn for the better. And this is true for both residential markets and recreational markets, which are typically a lead indicator for the real estate market, because typically higher activity in recreational markets means there's more cash available and more positive sentiment about what's going to happen in the near future as people start to buy recreational properties. So I want to jump you in and I want to show you first and foremost this headline from BNN Bloomberg, and then I'm going to take you across the country and show you the headlines from all over Canada. So this one starts with demand for homes in recreational markets outpacing supply. And this article covers multiple different areas. So it starts with Banff and Canmore, which is of course located in Alberta, and then it talks about the Muskoka region in Ontario. And basically what we're seeing across Canada is those recreational properties become very popular once again. Now, this is something that hasn't happened in several years, at least not to the extent that it seems to be happening right now. And then as we start to move across the country, we start to see pretty similar themes playing out in pretty much every major city in Canada. So starting with Ottawa, we're still seeing that home prices and sales still well below the highs of last year. But when you start to dig into the numbers, what you see is that home sales are down about 40%. However, when we go ahead and we take a look at the average sale prices, well, they're down 17% compared to last year, but they're up 0.2% over February of this year. Now keep that in mind as we move a little bit further on here. Now let's jump over to Vancouver. Vancouver home sales in March fell 42.5% from a year ago, which is 28.4% below the 10-year seasonal average. But when we start to look at benchmark price, what we see is that the benchmark price is down 9.5% from last year. However, it's up 1.8% compared to February. So see the theme here? Down significantly from last year, up from the month prior. And what that's starting to tell us is that the market is starting to find a bottom, or at least a resistance point. And then we look to the Calgary market. Calgary housing market sees lowest March inventory since 2006. Now, if you know anything about the Calgary real estate market, you know that 2006 was a huge year for real estate, with prices increasing quite fast and at a pace that had never before been seen in Calgary. Now, that isn't quite the exuberance that we're seeing at the moment, but if you look at the number of sales, we're down about 40% compared to March of last year. But if we look at the benchmark price, it's up almost 1% year over year. Now, Calgary is an interesting market that didn't see the same declines as the rest of the country. And it's one of the few markets that hasn't seen a really big drop compared to the previous year. And it appears that this positive trend is going to continue within Calgary, especially given the low inventory numbers. Now, as we move into Toronto, which is the market that a lot of people want to see, you can see that prices rise for a second month as market tightens. So market tightening means there's less homes available to buy, and I'll get to the buyers returning to the market article in a second. But if we take a look at the numbers, this is where it gets really interesting for the Toronto market. The benchmark price for a home in Canada's largest city climbed 2.5% to 1.12 million in March from a month earlier. So that's a pretty big jump for a market that has seen some of the biggest damage from the rising interest rates in the last year. And this seems largely due to the fact that buyers are returning to the Toronto real estate market. And when you look at the articles that are coming out from the Toronto real estate market, you can see that the theme is that competition between buyers has started to reemerge. So in other words, they're seeing more buyer activity and they're seeing more competing offers. And I confirmed this with my friend Tom Story in Toronto, who is one of the best realtors in that market. And he says, yes, this is exactly what they are seeing. Now, that being said, the average price compared to last year is still down almost 15%. And I'm relatively certain that if we looked at the benchmark pricing, it would be down more than that, with of course the benchmark pricing being a more accurate measure of housing prices because it looks at standardized properties and compares the values of those rather than looking at the total market numbers. And to no surprise, the number of sales were down almost 40%, 37% compared to last year. Now, there's one outlier to the entire market mania that's happening as of right now, and that is the Quebec real estate market. Montreal home sales hit new all-time low for February. And to no surprise, the median price is down there. The median price for a single-family home was $515,000, down 6% from a year ago. Now, median price tells a different story than average price and benchmark price. That's because the median price is basically a list of all of the transactions, and then you pick the one right in the center, which tells a different story than average price or benchmark price, which are both averages. And therefore, median price doesn't take into account the actual values of all of the properties that are being purchased. It only takes into consideration that one that's right in the middle. So you have to be conscious of that. If we looked at average price in Quebec and in Montreal, my guess is we'd probably see that it's probably closer to that 18 to 19% number as well, although I can't be sure of that without going and looking at the data. So as you can see, there's a very consistent theme across the country. Down about 40% in the number of transactions that are happening, but up slightly from the previous month. And what that tells us is it tells us that there's a level of resistance happening in the market. And barring anything unforeseen, like some bad economic data or further interest rate increases, well, this could be the floor of where the real estate market finds itself for 2023. And of course, that's either good news or bad news for you, depending on where you are in the market. But in addition to the data and the numbers and the sale prices, I also want to show you something that we haven't touched on in quite a while on this channel. And that is the incredible data that we get from Nanos with respect to consumer sentiment and expectations of real estate prices. So let me pop you in here and show you exactly what I'm talking about here. This is the Nanos data. And what they do is on a weekly basis, they interview 250 Canadians, and then they have a rolling 4-week average that basically creates a 1,000 person cross-section of the Canadian population. And that gives a pretty good indication of what sentiment looks like in the country. Now, they obviously have data with respect to politics and real estate and the economy, but I pulled out 3 pieces and made a custom graph here to show you exactly what's happening, 1 with consumer sentiment in the economy, and 2 with expectations of real estate. So first and foremost, let's look at consumer sentiment, which is the light blue line. And as you can see, back in June of 2021, consumer sentiment was quite high. We had low interest rates, things were looking good, people were going back to work, COVID seemed to be ending, and people in general were in a pretty good mood about the economy. Then we started seeing interest rates go up. We started seeing the indications that interest rates were going to go up, and you can see consumer sentiment came down quite substantially. Well, since November, we've started to see consumer sentiment start to rise. Now, why is this so important for the real estate market? Well, with consumer sentiment on the economy comes positive consumer sentiment for the real estate market. Now, these things don't always move in unison, as you can see from the graphs here. However, what we're seeing right now is we're seeing that the expectations that real estate will increase in value go up, and we're seeing the expectations that real estate will decrease in value go down. So the dark blue line here is the expectation that real estate values will go down. Now, obviously during COVID, this went up quite high, and it started to go up quite a bit here at the beginning of the year. But what we're seeing right now is we're starting to see that the expectation that real estate values will go down is decreasing. And of course, that also means that the orange line, which is the expectation that real estate values will go up, is increasing. And therefore, what that means is that people in general are starting to believe that housing values are going to start increasing, which means that as we come into the spring market, even with higher interest rates, people are looking to get back into the market. That's why we're seeing those buyers flock back into the market in places like Toronto and Calgary and Vancouver and Ottawa. It is because in general, with the pausing of the Bank of Canada, things are starting to look more positive from an economic standpoint, and as a result, people are jumping back into wanting that bigger home. Now, on top of all that, we're also seeing that vacancy rates in the commercial sector are the highest that they have been in quite some time. In fact, in Vancouver, office vacancy rates are the highest they've been since 2004. And there's also similar data coming out of Toronto. So what that means is that companies are downsizing their downtown core offices. And what that indicates is that more people are continuing to work from home. Even as Elon Musk and Amazon and Facebook and Apple start to tell their people that they need to start going to work, well, it is clear with the vacancy numbers that more people are working from home. So as we start to see more people get more comfortable with that, that's also going to lead to some lifestyle changes and a further shift in buying decisions. So we could see that add upward pressure to the Canadian real estate market as well. So here's what you can expect. The Canadian real estate market has definitely found a level of resistance. There's no denying that. Whether it goes lower, whether it goes higher is anybody's guess at this point. So if you're looking at getting into the real estate market, now may be the time to do it. But what you need to do is you need to understand your market, you need to understand the economic dynamics of your market, and you need to make sure that you are buying at a time when prices aren't about to crash. Now, I cover that in my Homebuyer Masterclass, which I mentioned at the intro. But at the end of the day, whether you're buying now or buying later, all you really need to do is understand your personal financial situation and whether you can buy a property, own it for the long term, and be able to survive any downturns that come your way. And if you can, well, regardless of if markets are going up or down, the earliest time where you're ready is typically the best time to purchase a home. Now, if you want to see more on why the Canadian real estate market may continue to go up, check out this video right here, and we'll see you on the very next one.